Okay, welcome back. Things are looking okay. The SGX has picked up a little bit of pace, and 18,009 or so is where the SGX Nifty is indicating opening at. Now, Sonia and Nigel, this is a big day for Indian equity markets for the simple fact that starting today, we fully operationalize the T+1 settlement cycle. Till now, it was T+2, right? You buy or sell a stock, T+2, trading day plus 2 days, you get the stock in your demat account. Yeah. That goes to T+1 starting today. Actually, the process started sometime in February last year, February of 2022, and SEBI has done this in a very phased manner. And the last 256 stocks, which include, by the way, the Nifty stocks, N6 stocks, and the large liquid institutionally held stocks, these also are now going into the T+1 settlement starting today. What does this do? This basically brings more liquidity. I mean, you're able to do more because you're getting the stock or the credit if you sold stocks in your account faster, which means, I mean, it's faster turnaround. And of course, this percolates down to pretty much, the entire market. There are already kind of voices from other asset classes, mutual funds and ETFs and things like that saying, well, if shares can be settled on a T+1 basis, why can't other things, debt, etc. even? So this is a very progressive, very solid move coming in from SEBI, which has now been operationalized starting today. Nithin Kamath is founder and CEO at Zerodha, the largest broker by far in the country. Nithin, great to have you with us here. I know you're not too well, but thanks very much for taking out the time and joining in. Your quick thoughts, Nithin, on this T+1, which now is fully operational.
Yeah, thanks, Prashant. No, I mean it's actually quite phenomenal that like how easily we've transitioned over the last 1 year into this T+1 settlement cycle without any issues at all, right? So I mean we are one of the first countries. I mean we are actually the first country in the world to completely go to T+1 across the entire market. I think China is T+1 in bits and pieces. I mean, kudos to SEBI and everyone who was behind making this happen.
And this is happening in a phased manner, right? I mean, have you seen the impact of the earlier? Because the process started in Feb of 22. Right. What has been the impact really? More liquidity, faster turnaround, etc. Have you been able to see that in data?
Yeah. So the thing, while the settlement was T+2, people could use the funds. I mean, there is this whole concept of what is called as an early pay-in. Yeah. So you could have done an early pay-in and given the customer, funds to trade more. So I don't think liquidity-wise, it's going to, significantly make a big difference because even today, like even yesterday, for example, if you had sold a stock, you would have gotten funds to trade more immediately if you wanted to, right, across most brokers. So I think what, people couldn't withdraw the money as in, so if you sold a stock and you wanted to kind of use the funds for any reason, you had to wait for 2 days. Or, if you bought a stock and you wanted to say pledge the stock for some reason, it would take you 2 days because it would take 2 days to get credited to the demat. So in that way, this is, there's a much faster turnaround. Yeah. Also, just generally it kind of helps for the working capital requirement of the brokers, in a way, because if you allowed if you gave credit to a customer who hadn't yet received the proceeds for 2 days, someone has to fund that for 2 days, right? I mean, it used to be the broker's working capital. Yeah. So now, it kind of helps that it's just for 1 day.
No, absolutely. It's wonderful. Nithin, since I have you on, I just wanted to ask you, I'm sure you've seen that SEBI study, right? On asking a simple question, do people who trade in the futures or options space make money? And the answer, and this is, I mean, they put out a 33-page report, which I went through, and we'll present this in more detail later. But the answer, and this is for 2 years only, so caveat, FY22 and FY19 pre-COVID, and FY22 was, the bulk of the year was calendar 2021 when, trading activity zoomed because people were stuck at home. But your thoughts on the data? I mean, the data shows 89% of those who traded lost money, 11% made a profit. Your first thoughts?
I mean, we've been quite vocal about this for a while now, because I think one of the flip sides of this whole influencer kind of led, activity in the market is that, a lot of people have come to the market with the wrong expectation that it's somehow easy to make money in the markets. So, I think people need to come with the right expectations. Then they will do, kind of trade the right way as well. So we've been quite vocal about this for a while now, as in saying that, while 11% make money, I think it's just 1.5% who actually make more than, like bank fixed deposit returns. So, and this is something that, we've published multiple times to, and, shared with the customers as well. So it's phenomenal that, the regulator is doing this, because in a way it's setting the right expectations out there. Now, is that 10% number too bad? In reality, it isn't. I mean, see, the thing is trading, active trading especially, right? I mean, trading derivatives, or, even intraday equity trading with leverage, it requires a lot of skill. It's like, if you pick up 100 people who started businesses and you want to see after 5 years how many made money doing a business, the number would be probably less than 10. So that that 5 to 10% kind of number, it's kind of the similar. The hit rate is very similar if you kind of pick up any kind of walk of life which requires a lot of skill, some luck, to succeed. Be it a sports person, be it music, be it running a business, right? I mean, these kind of walks of life, it requires skill, hard work, and also a little bit of luck to kind of hit it out of the park of sorts. So odds-wise, it's very similar. So, like I said, if you actually want to see people who have really made money in the markets, a lot more than bank fixed deposit, I mean, that number is closer to 1%.
Yeah. And you're absolutely right. You've been very vocal in kind of cautioning, investors, people on your platform, other platforms, that trading, it's fascinating, but it's one of the toughest things to do for a living, at least. Absolutely. I mean, I think this SEBI study and so many others before it kind of proved that. But thank you very much, Nithin. Appreciate you joining in. Great to speak with you, and take care of that back of yours. We'll touch base once again later. Sonia, back to stocks and autos.
Absolutely. The big moves are coming in the auto space this morning. Tata Motors, Bajaj Auto are all your big movers, up 3 to about 6 odd %. So Prakash Diwan is still with us. So let's get just one comment in from him. Prakash, the stock I wanted to ask you about was Amara Raja.